Well, good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. I am live from Puerto Rico. That's right. I've never been here before. I just spent the first 12 hours here. It's the most beautiful island. I'm here oceanfront. I'll post some pictures in a bit, but I'm literally sitting right at the edge of the ocean. I'm about 20 feet away from the beach. It is beautiful here. The weather's gorgeous, and I'll be here till next Monday. The only time I will not be doing a video will probably be next Monday, but I'm here for you guys, and I'll be here in the VIP room today, which starts at 10 a.m., and I got some good stuff to talk about there. Now, for anybody who's watching these videos, please like our channel, subscribe to our YouTube channel. I post these videos in the YouTube Wealth Press channel every day as soon as I'm done processing them. You can get them there even before they're on Telegram. You can also find all the links to the Telegram channels and all the good stuff, all the good things that we're promoting that day on that Telegram channel, in that YouTube channel. I get confused. YouTube, Telegram, it all sounds the same. I must be getting old. So it's about 7:24 in the morning. The market's going to gear up to open up in about 2 hours and 6 minutes, if my math still is correct. Not jet lagged as usual. The flight here is only 2.5 hours straight from Jacksonville. I didn't know that. Anyways, you can see here, the Dow's down about 100 points. The Nasdaq's down just a little bit. And today is a huge day for the market. Why, you may ask? Of course you want to know. Because Apple is coming out with earnings. The most anticipated event this week. Giant slated to disclose its report after the close. You know, they're not going to give them to us in the opening bell. They're looking for earnings to be down 5.9% year over year, the EPS, which is a lot better than a lot of companies that are reporting a haircut of 30, 40, 50, 60%. They're not doing that, okay? So only down 5.9% on 4.4% higher revenue. I did not think that Apple was going to beat earnings till I saw the earnings numbers from all the other FANG stocks, and they did better than expected. So I'm going to assume that the number one company in the world is going to do better than expected as well based on the other FANG stocks. But again, what does Wall Street do? It always surprises us. Apple is not the only stock to report earnings today. You've got AEP. I'm just looking at stocks that we trade frequently. Budweiser. Let's see here. Ball. Square. Borg Warner. We trade that one all the time. Cardinal Health. Carvana. Cirrus Logic. Let's see here. ConocoPhillips. Datadog. Dish, my favorite stock, is coming out with earnings today. That'll be a doozy. Dropbox. I still use Dropbox, actually. I don't trade it, but I use it. Expedia. FT&T, that's one that's coming out with earnings. GoDaddy. I think we liquidated FT&T at a nasty loss yesterday, actually. Kellogg is coming out with, we've been doing pretty good too, but not on that one. Kellogg's coming out with earnings. Can't wait to see how consumer staples do. Monster Beverage, Motorola. I mean, it just keeps going and going. Papa John's. Let's see, Peloton. They're still in business. Planet Fitness, Quanta Services, one of my favorite stocks. Royal Caribbean, it'll be interesting to see. Stanley Black & Decker, Shopify, Texas Roadhouse, very tasty food there, especially their sweet potato fries. Yelp and Zeotest, they're all coming out with earnings today. Be prepared to watch the stock market and the bond market move. Now, speaking of the bond market, notice the bond market went up yesterday. That means lower rates. The Fed spoke yesterday. That had a lot to do with it. But let's talk a little bit about what they really said and what it means and all the other news, and then I'll get into the technicals with you. So the stock market ended the session in the red. I told you to be careful with the Nasdaq, that it was topping out, and the S&P. I warned you about this as market participants digested Federal Reserve Powell's comments following the central bank's widely expected 0.25 basis point rate hike. And notice the market didn't move all that much. It wasn't like crazy or anything like that. Federal Reserve raised rates by 0.25 basis points in the 5.25 range. I expected a year ago for them to go to about 5.4. I remember saying that. That's the highest level, by the way, 5.25. Highest level in nearly 16 years. Money's starting to be worth something again. Federal Reserve statement softened from March, indicating that the Federal Reserve may pause rate hikes as its June meeting. The Federal Reserve, Mr. Squirrely himself, stated that policymakers would take a data-dependent approach in deciding on the federal fund rate. At the same time, Powell ruled out cutting interest rates because inflation was still not expected to come down quickly. So he's leaving it open, and I'm telling you right now that the market and the Fed are not seeing the same thing. If the economy gets worse, they're not going to be raising rates for a different reason. That's because we're going to be in a recession. The Fed chair said that the conditions have broadly improved in the banking sector since March. I agree with him on that, actually. They have. Well, it's not that they've improved. They haven't gotten much worse. We're not seeing 50 banks fall out. I think that's where he's going. Economic data on Wednesday via the U.S. ADP non-farm employment data, which has not been reliable at all, stood at 196,000 in April, above expectations of 148,000, marking the highest monthly increase since July 2022. But it hasn't been transforming into the public reports, so it's been kind of it hasn't been really all that great. So not really a big fan of that. Today, we're going to be focusing on the jobless claims. It'll be interesting to see. It comes out in about an hour. It'll be interesting to see if the number is closer to 240 or 230, if it peaked at 240 and is dropping, or if it's going to start moving higher again. Europe is down this morning as investors are awaiting European central bank's widely expected interest rate hike for the 7th time in a row, with a 0.25 basis points in the bag. A lot of European data come out, which I'm not going to bore you with. It's just not that instrumental right now. China, we haven't talked about China in a while. China closed higher as upbeat holiday travel overshadowed a contraction in factory output. A private sector survey showed on Thursday, and we got to watch China very closely, that China's factory activity unexpectedly shrank in April, reinforcing concerns about an uneven economic recovery after countless COVID mumbo-jumbo nonsense that happened over the years. It's going to be hard to get things back up there that fast. I mean, we were in it for a year and a half. They were in it for like 3 years. Also, the Ministry of Culture and Tourism said on Wednesday that the number of domestic trips made over Labor Day holiday stood at 274 million, up 19% from the pre-pandemic level. That's very, very encouraging. Talking to real estate agents here, it appears that the the touring market, especially holiday travel, islands, going across airports, they seem to be doing pretty good right now. There's nothing really crazy going on. Looks like they're recovering. As long as energy prices don't go up too much, they should be okay. Qualcomm plunged after they reported negative earnings. Cuervo, they make chips for Apple, which is reporting today, over 6% in pre-market trading after they delivered better than expected results. I'm expecting Apple to do well, actually. Merco Libre came out better than expected. TripAdvisor dropped over 6%. Consumer discretionary stocks are not doing great right now. Today, you've got Apple, Conoco, Bookings, Bector Dickens, Shopify, EOG Resources, you name it, it's coming out today, including the stock that we liquidated yesterday that didn't do us any favors, FTNT. Now, in terms of performance, I want to show you energy. Look at energy. It's at some of the lowest momentum levels that it's been. I'm expecting energy to kind of sit down at the lows and start coming up quite a bit. Look at utilities right now. Utilities are in the crapper too. Look at momentum levels in utilities. Let me show you this. Look at that. So utilities and energies, and that kind of makes sense because they are correlated. They seem to be moving together. Look at energies. It's literally at zero. So right now, energies are really, really undervalued. All the other sectors are still kind of midstream. Financials are going a little lower. Consumer discretionary is hobbling around. Infotech is going down. Let me show you this. I warned you. Remember? Do you remember right here? Look at where we're at right now. That's Infotech and communication services. That's Infotech. Look at communication services. It ain't looking all that much better. They have a little bit more to go, and they'll be bottoming out. But I'm expecting the market to be choppy and start looking a lot more like this overall, because that's what the bond market is doing. Let's see here. Let me show you how low I think we're going to go here. I think we may come down just a little bit more into this level. I don't see us breaking too much down right now because earnings are just not that bad and economy's not that bad. I think we're going to just remain in this channel where we've been for since for about 6.5 months now. I think we're going to remain in this channel, and partly because of the bond market. I think the bond market's going to keep coming up, maybe give us a chance to sell it again at the 108, 110 level. Please, God, give us that opportunity. But seriously, I want to see it rally. If this rallies, remember, bond market rallies means interest rates go down. If interest rates go down, it'll relieve some of the pressure on technology stocks. The main low hanging fruit right now is utilities and energy. And by the way, they're not doing all that bad on a sentiment level. Now, as far as, remember, today is Thursday, and on Thursday I give you ETFs. And right now, I'm going to tell you right now, without a question of a doubt, my favorite ETF is the consumer staple ETF. We actually took a profit on it yesterday and made money in the morning. I like the consumer staple ETF. I like this trend. I think this trend is going to pull back up. The risk right now is very, very low. And if I was looking at options, I would probably go, let's see here. Yeah, go 106 days out. You got plenty of open interest on the 75s or 80s. Or if you want to go and roll it over in the next 30 days, in the next 3 weeks, go with I would probably do the June 16th and then roll it over in 2 weeks, right when it hits 30 days. And there you could do the 77s for like $1.50. That's a really, really good deal. And I think consumer stocks are going to be in vogue right now because you're still seeing downsides after earnings in the info, communication, and technology. They're not doing anybody any favors. So consumer staples is where you want to be, because if interest rates go up, they'll start making money. If interest rates go down, it'll be easier to afford consumer staples. So no matter how you look at it, being in a defensive sector is where you want to be right now. Now, folks, before you go, if you love a good bargain hunt, then I've got something you don't want to miss. I just revealed a brand new way to trade, and it has to do with ignoring a stock's share price and focusing on the option instead. By identifying what I call a pricing mismatch, even a tiny little weeny 1% move in the stock could lead to gains as high as 31%, 41%, even 46% or more in a matter of days. No, you're not going to get 1,000% return on stocks that are moving a percent. Forget that. Get that out of your head. It ain't going to happen. But you can get 20, 30, 40% on the option overnight. Once you learn how to use this information to your advantage, you'll never look at the market the same way again. I'm telling you, it's a game changer. Click the link below. Check out this free presentation. Don't miss out. You don't want to miss this out. This is some amazing stuff. You're going to love it. Follow the link below. It's 1 hour of your time, and I promise you will have a great time. Any questions, comments, feedback, support@marketgeeks.com. Send me an email and watch my videos. I want to make sure you watch them and get a lot of value from them. Have a great day. I'll see you in my VIP room at 10 a.m. today, and I'll be reporting live from Puerto Rico till the end of the week. Bye, guys. Have a great day, and I hope you're having a wonderful, wonderful Thursday. Be careful with Apple's earnings. Apple has the biggest market cap of any stock. If they move big, it can cause a big ripple in the market. You may want to lower your exposure a bit. XLP is the right ETF. It's completely out of that realm, and I hope you're having a good time in the markets. Bye, guys. Take care. Have a great day.